Okay. All right. Let's continue. So I said, please, can you see my screen? You can see my screen. Just drop the high as usual. You can see my screen. Drop the high as usual. All right. Okay. Okay. So now, like I was saying, I said, like, look at this. Market is actually bullish here, right? Market is bullish here. So look at this. So I knew that markets had already got into, like, markets would always come back to this zone. There are different things you have to, there are different conferences. Let me write it out. Conferences that you need to, like, or let me say, what are conferences? Like, there are things you have to use corroboratively. I hope my English is not too much like this. There are the things you have to check, like, vis-a-vis. Jesus. There are the things you have to, like, check together and put together to, things you have to put together to determine, like, the how you get to trade, basically. So, like, if I just keep explaining this way, but let me try explain regardless. Let me explain regardless. Let me explain regardless. So I knew that market had already got me. So to my major, like, low here, a major low here. Market, swept, liquidity here. This higher low. So this actually became my what? My strong low, a strong low. This is my strong low, right? Market broke this. The market came down here. And this also became my strong low. Just pay attention. This also became my strong low, right? Hey, what's wrong with my screen? Can you see my screen? Can you see my screen, please? If you can see my screen, just send I. Okay, thank you. All right. Okay, so look at this. So market got to my low here. So definitely, our market broke it a little. Market broke it a little. So there's actually a um a sell side liquidity resting below this, and that is what markets would always seek after. The market would always seek to to raid, to break liquidities. So market had already broken this liquidity a little, right? So I believe that, like I said earlier, I said after a break of structure, always expect a reversal. After a break of structure, after a major break of structure, like, that is it. Like, after a major break of structure, always expect a reversal. Always expect a reversal. So markets reversed, started reversing. Sorry, can you see my screen? Oh, I need to. Can you see my screen, please? And hope I'm not hanging. Am I hanging? Is there a glitch, please? No, thank you. Okay, let me try. Oh, I need to admit all. I did not admit them. I can see you. I can see your message. Damn, I've admitted all. I've admitted all. I'm just trying to admit people. Oh, sorry, people. Sorry, everybody. I'm sorry. I'm sorry. I just started. I just admitted everybody now. I thought I had already admitted everyone. Damn, are you inside now? Can you just drop a message on my.
Yeah. Go on.
All right. Sorry. I'm sorry. I thought I already admitted you. All right. Oh, for the sake of people that just joined, let me go back again. I said after a major break of structure, always expect a reversal. After a break of structure, always expect a reversal. Like I explained here, let's say market is going up. Let's say market is going up. These are strong blue, right? Where we are not expecting markets to come back to. So markets, let's say markets got to this point. Then markets broke this structure. So the moment markets break this structure, always expect markets to come down, because that's how market moves. Market moves from liquidity to liquidity. Market moves from a point to a point. So if market does not target something here, this liquidity. I told you that like there's a liquidity here, which makes our higher highs low. Me, I don't see 10 minutes. Yeah. Which makes our higher high, which makes it weak, which makes it weak. So there is something here. There's something here. So after a break of structure, always expect a reversal, right? So I knew that what markets broke the structure. Actually, our overall trend is bearish. If I go to the higher time frame, you will see our overall trend is bearish actually. Bearish. Look at this. Can you see? Can you guys see this? Can you see it's bearish? If you can see like the bearishness of this, let me can I see your hand? I mean, can you say I, please? Can you say I? If you can see the bearishness, can't see it. I, thank you. Promise. Is that promise? Promise Harrison. Okay, all right. So I believe you all can see the like the downtrend of this. That is, market is dropping. Market is dropping. Look at this. Now look at this. Let me use this as an instance. This is a strong high that you are not expecting market to come to, right? That is the strong high you are not expecting market to come to. This also, this also is a strong high you are not expecting market to come down to, right? Eh, likewise, this, right? As you can see how I marked it out already. As you can see how I marked it out, like this is a strong high. That is, the market is bearish and a weak low, right? Market broke it. And after the break of structure, what happened? Market reversed immediately, right? Market reversed immediately and came down again to break, to seek for the weakness of this low. Can you see that? Market protected here as well. Let me admit these people. All right. Market broke this. Sorry, let me check my time. Oh, hope I'm not doing too much. Okay, we have a few more minutes. So market broke this low, protected this high. That is, this became our strong low. Market broke this low, obviously. Market broke this low, right? Broke this low, reversed, right? And this became our strong low. But look at this. Market, broke this low again. Look at this. Market broke this low again. Broke this low and left this as our strong low. Pay attention, no. So now look what market did. Market now, started. Market now broke this. Now that was why I said this now became our potential market shift. Pay attention, our potential market shift. Let me delete these ones. Okay. So this became our potential market shift. I think I explained market shift, right? I already explained market shift. So this became our potential market shift. So now, if markets would keep or maintain its, if markets would maintain its bearishness, right? I would actually want markets to start reacting. Markets failed to break this high. If markets broke this high, let's assume markets broke this high, then actually we've now became, I mean, markets had already turned towards to, markets would keep, breaking these highs already, these highs, and markets would shift from downtrend to a an uptrend. But look at this, market failed to break this high, right? So, but market already broke this high. So that was why I said we have a potential, they actually had a potential market shift here already. So if markets would continue the upward movement, If markets will continue the upward movement, we want markets to break this high again, to break this high again. That is, markets, we will now ascertain that what markets had shifted from downtrend towards uptrend. But markets did not break this high. So markets only broke this high as our what potential market shift. So now look at this. Markets is reacting from this point here, from this point. So markets broke this low, that is swept to this low, and this became our what our protected low. This became our protected low. If markets will continue the upward movement, but if markets will not continue the upward movement, so we need market to break this low to reverse to this point, to this point here, and to this point here. Let me show you. Once market to reverse to this point here, once market to reverse to this point here, the market has already broken this low, so we want it to reverse. That was why I bought here, because we had a this is actually a liquidity here, fair value gap. So I wanted market to fill this fair value gap, up. That was why I bought here today. So I would want market to come to this, to this point here actually, and continue the downward movement. But if not, like just quote me anyway. If volatility 75 will continue buying, please can you still hear me, please? Oh, who is drawing on my screen? Can you stop that, please? Don't draw on my screen, please. Stop that. Who is Abba Mohammed? Can you stop that? Ah, I will remove you. I will remove you. If you do not stop. What's the meaning of this?
Omotola, you can remove him. You can remove him.
What's the meaning of this? Like, that was a nice one. Oh, there, she only correct her. Sundre. Okay, don't be stupid, brother. Yeah, I've removed him. Like, that's so stupid. Ah, what's the meaning of that? All right. So I said, quote me anyway. If volatility 75 would keep buying, right? I would want it to, to react from this point here. Like, I don't really have any I do not want it to come to this flow again if it would actually maintain its upward movement. If this would stand as our market shift, I do not want this to I do not want market to break this flow, right? If we would maintain this as our market shift. Do you get? Because what this plays actually, like in this higher time frame, it is efficient already. That is, we do not have any gap here. We don't have any reason for market to come to this place. It is efficient. Likewise, this place was efficient, right? But market, struggled and broke it. Do you get? So if markets would actually continue the upward movement, like I would want it to rise from this point and break this high. After breaking this high, come down a bit again, continue the movement. But if not, then let's sell. Would actually buy to this point, this other block here, or above this fair value gap here, other block here, then sell from there. So that's what I'm expecting market to do. So we actually have like few more minutes. Let's say 5 minutes now. Let me quickly. I hope you guys are following. If you are following, can you drop I? Yes, I've removed him already. Can you drop I? If you are following, please. Okay, okay. All right. All right. So now let's continue. So I said, uh, So I was explaining the movements of markets, right? So I already explained the downward movements of markets, right? How market moves, how market moves from point to point, right? Like that is this is what our like this it was basically what I explained here in this 24-hour time frame. 24-hour time frame. So if I drop, so that was what I would okay, that was what I did today. Now let me drop down to 15 minutes to show you how I took the trade. To show you how I took the trade. Then after that, we'll call it a night. So now if you remember, I I marked this as what? As my low, right? Which market broke. And immediately markets broke it. What happened? Markets reversed. That was why I marked this out as my what? As my, like breakout. I marked this as my breakout, right? So I waited. Actually, I made a screenshot of this. I can send you the screenshots. I made a screenshot of this. And I was expecting markets to break this high. The market actually broke the high. Do you get? Let me drop down to 5 minutes again to show you. Look at this. Now, market had already like I knew that markets would react from here. Markets consolidated here, like was ranging here, right? And if you check, there's actually something I trade like also. Like I would want market to, to do something like this, to range. We call it accumulation, manipulation, distribution, thereabouts, right? Then give me a manipulation, then break this high, then come down to retest and move up, right? So I knew that was what market was doing. GK. So market had already this was like a fake out. Market broke this consolidated area, then moved up. Market broke this high. Use this as what? As you can actually take a trade. I can actually take a trade rather from this point again. That's our breaker block. And actually take a trade from here. As you can see, market entered the area. But look at how I took my trade from here. Let me show you from 1 minute time frame. Let me show you from 1 minute time frame. Coming, coming. I am coming. Okay, so now, so look at this. Markets broke this high, yes or no? Broke the high. Then markets use this as what? Like I already saw that what these areas are efficient already. Are efficient. We do not have any gap here at all. Then markets broke here with a large volume, right? Broke it with a large volume. Then we have another block here. Another block here. That was why I took my trade from this point. So I now covered this low as my stop loss, then targeted this high here. This high. This high actually. This high here. Targeted this high. Because that's our major, like if you go to 15 minutes time frame, you see the major structure there. So that was what I did today. Like yeah, it's this summit. It's actually for so I'm rounding up already. So the summit actually the summit is actually it's for beginners as you saw on the flyer. So I wouldn't want to like because like if it's left to me, I would love to like go like keep going till I'm tired or just keep going. But um I would just love to stop here tonight. Like I would love to stop here tonight. I'm like it's an eyesore and it's somewhat painful. Did I say I saw? Sorry. Like, I was not meant to say I saw. I saw. No, it's not the right
Um,
phrase.
Omotola,
Yeah.
Omotola, you can probably take your time. I've already talked with him, so you can probably take your time and continue.
Ah, okay.
Don't worry.
All right. So I'm also like I'm hanging on a thread at the moment. So I think I only have um I can only do more like 5 to 10 minutes actually because I have another meeting to do tonight. So let's just continue then. So like in a major structure, let me talk about major structures. Major structures. So let's say this is our major structure. Like where do you check your major structure? How do you check your major structure? You go to higher time frames like daily time frame and 1 4 hour time frame. Like how I analyzed the trade I took today, like I showed you. I went from daily time frame to 4 hour time frame. From 4 hour time frame, I went to 15 minutes. From 15 minutes, I went to 5 and 1 minute. Like you see, this is what I trade. This is how I trade every day. I would always go to 24 hour, even if I had already analyzed, right? I would still come back to check these trades, these time frames rather, every single now, every day. Rinse and repeat, rinse and repeat. Every day, rinse and repeat. So that's what I do every day. So can you see if you can hear me and you are following, drop I. Let me see. You are following, drop I. Let's see. I need more. 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 Mhm. This person said I should point out the best points to trade immediately we get to a lower low. It's not. It does not work that way. It doesn't work that way. I'm just seeing your question. It does not work that way. Why? Because, like I said there are conferences. There are things you need to see in the market before you could say, "Oh, let me enter a market." You can't just like there are many things to learn in technical analysis. Your knowledge of market structure, which we are doing part of it. Your knowledge of market structure, your knowledge of liquidity, your knowledge of range. I trade range as well. Knowledge of range, where to how to determine your range, what do you need to see in the market, right? So you just have to that you don't just get to if market gets to this point, oh, maybe this is my support, oh, I now put this here. If market gets to my maybe this is my resistance, oh, I need to buy. No, it does not work that way. It doesn't work that way. Like the people behind these charts, that is these candlesticks you are seeing, those people behind the price. Actually, it's not about the candlesticks. It's about the price. These are called price. If you go to Euro USD or any chart, you see things here. They are called price. So it's about time and price, actually. So analysis is about time and price. So your the people behind the price, they are called bank. These smart banks, or what do they call them? They are the banks, right? So the institutional banks, they are institutional banks. Those institutional banks, they are actually the one that they are actually determine how price move. Do you get? So that's why we study our technical analysis to be able to outsmart them because they do not really want you to make money in this financial market. So what they do is that they get to manipulate different things, get to manipulate. So you do not want to, shoot yourself in the leg. You do not want to shoot yourself in the leg by trying to, just trade, when market gets to this point, I'll sell. Look at this. Like immediately, let's assume you sold from here. And market, went up a bit. So now target your stop loss, then move. That's why many people say my market eats my stop loss immediately, then reversed. It's actually because there was something you didn't pay attention to. Do you get? So in trading, you actually have to you really need to check many things corroboratively. You check them all together, putting them all together. Do you get? To determine how you trade. So you don't just trade, shabbily. Like you don't just trade to like in a like shabby way. No. We actually have to pay attention and check if the market ticks your confidence. If it ticks how you trade your hedge, that's why you have a hedge. You have an edge rather. That's why you have an edge. That's why you have a bias, like things you need to see in the market before you trade, right? So, so now let me quickly talk about the major structure. Like I said, I have let's say I have like 5 to 8 more minutes. Let me quickly talk about major structures. So now in major structures, I would like you have to check higher time frames, like 24 hour, 4 hour, 1 hour time frames for your major structures, major structures. So now this coming, this is your what? This point here are your what? Are your major structure. So anything inside are what? From this point, let's say this is what? Okay, coming. So let's say this is A, B, C. So from this point here, where I highlighted here, and this point, they are what's your major structure. Major structure. That's why if market, so where the target is, let's say market, got to this point. So you do not want market to break this low. Pay attention, no, you don't want market to break this low. Come in. You don't want market to break this low. You want market to come to this part. Then you do not want market to break this low. And do not forget, running out of time. Uh, okay. So now, so you don't want market to come to this part. You want market to break this high, to break this high. You don't want market to come to this low. You don't want market to come to this low. So now your major structure, don't forget your major structures. You look out for them in higher time frames like 24 hour, 4 hour, 1 hour. Pay attention the hourly time frames. 24 hour, 4 hour, 1 hour. That's where you check for your major structure. And since market is in an uptrend, that is the schematic we are using. Schematic we are using. So now look at this. So this from this level here, we would have structures. That was why I explained that market is fractal, right? That is anything happening in the higher time frame is happening in the lower time frame. We have structures inside structures in the lower time frame, in the lower time frame, in the lower time frame. So let me take this out. Let me take this out. So I will now draw it well, proper. I'll now draw it proper now. So pay attention. So let's say, okay, let me start from here. Okay. So I'm trying to draw the internal structures of this leg here, and this one here. Okay, let me just use this and this. So pay attention. So I want to draw the leg of this. I want to draw the leg of this. I want to draw the leg of this, then this, like the the minor structures rather. So I've already explained major structures, right? You look out for them in higher time frames like 24 hour, 4 hour, 1 hour. So let's check for internal structure. That is market structure. Anything happening in the lower time frame is happening in higher time frame. Anything happening in the higher time frame is happening in the lower time frame, right? So I want to draw the leg of this. Okay, let me add this my boss. I want market to do this from here. Let's say these are minor structure. Market to come pay attention, please. Just pay attention. We're almost done. So it's got here, right? Then market, I'm drawing this. Oh, market got here. Then start moving. So this is what the internal structure, which is what. So the major structure are the external structure. I think it's making sense now. The major structures that you look for in 24 hour, 4 hour, 1 hour are external structures, which are what these ones here. That is like I'm trying to teach you how to like get to understand these structures. So also this is what external structures here as well, but I just want you to understand this by using external. So the major structure, let me just stick to major. So this is the major structure. So the major structure, where do you look at where do you check them? Check them in higher time frames like 24 hour, 4 hour, 1 hour. So the minor structures, where do you check them? Check them in lower time frames, like actually let's say 15 minutes, 5 minutes, and 1 minute. So let's say this is our 5 minutes, and this is what our 4 hour time frame, and this is what 15 minutes time frame. So now what are you expecting market to do? This is what's protected, right? This is our protected low. Our protected low, right? Our protected low. That's our protected low. And these are what this is where you want market to come to, right? Again, eventually. Market this that is here, this point. Don't forget I'm trying to like can you understand this and this that I'm trying to do? If you can understand, please drop I again. Drop I, drop I, drop I. We have limited time. Market, I mean the time will end in 4 minutes. So if you can understand, please drop high. All right. I need more. 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 Okay. All right. So look at this. So now, what are you expecting? So what are you expecting market to do? I would want market to what? To break this, to break this low, right? Then I'll look for a sell opportunity here and sell to this point. To this point, since I do not want market to break this low. That's why you see things like this, in time frames. I mean, in structures, you'll be like, the B market is going up. So why is he selling here? So why is he selling here? So that is what is happening. The ones selling, and if market is buying in a higher time frame, it will now seem as though market is selling in a lower time frame. It's because of what the internal structures that are checking. Tickets. So markets will do something like this. Are you getting my point? Maybe there's a QM area or fair value gap or order block or breaker block, whatsoever in the trade. Then what are you expecting market to do? You're expecting market to continue the trend by breaking this high, right? This high, this is a downtrend, minor downtrend, right? Right? The market will shift again from here. See that trend is actually bullish. You want market to break this high. The market had already shifted. That was what I traded today. You can remember what I showed you. Then to retrace again. Then what? Continue and break this high. So that's what happens. So in a higher time, I mean a major structure, it will now look like this again. To look like this again, and break it again. Break it again. So sorry. Then break it again. So this is how it will look in a higher time frame. Does it make sense? If it makes sense, drop I again. If it makes sense, or if it made sense to you, drop I. Drop I, 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 drop I. I need more. I need to see more. Okay. All right. So that will be all for tonight. I hope you get to wait till the end in the summit to learn from others, and I hope you learned in tonight's class. Um, like I said, this is just for beginners to just introduce you to what market is doing. Like what what to look out for in the market and to determine the structures in the market. Yeah. So that will be all for tonight, and that will be all for tonight. Actually, it's painful, but that will be all for tonight. So see you, maybe some other time if God says. So see you if God says.
Ending.